Chipotle is a very popular fast casual restaurant in America. In today's video, we're going to evaluate whether or not buying it at today's price could make sense. So let's look at the current numbers. They made a revenue of $11.3 billion in last year with a net income of $1.5 billion, which gives them a profit margin of 13.5%. A bit lower than they potentially could do, but still on a very high side of companies of this field. They're currently sitting at around $39 per share, which gives them a P of 34 based on last year's numbers. So way on the expensive side. Apparently the market expects a lot from the company. Now let's look at two different cases to evaluate whether or not buying at this price could make sense. Let's look at a bear case for the next 5 years. And let's assume a bit lower revenue growth of 7%. I think that's still good for a company of this type, and especially for a bear case, that they still open a couple of more shops, that inflation drives the prices higher, but on a lower end. And still a rather stagnating profit margin of 30%. And they have been buying back a couple of shares, so I would expect, even on a bear case, that it continues in a slower rate. And valuing the company is a bit difficult. For a company that probably doesn't reach the goals that the market is currently placing on them in such a bear case, I would definitely lower the PE quite a bit. But considering that Chipotle has such a high profit margin for a fast casual restaurant company, I would still give them at least something a bit higher than the average. So I'm going with a PE of 17. And this would take the stock price to around $29, and by today's price, that would be a declining annualized return of 5.66%. So let's look in contrast at a bull case. Same 5 years, but this time a lower double-digit growth and a higher increase in profit margin of 17%, and a bit higher share buyback of 5%. And a PE of 20. You know what? Let's go with 21, as these are pretty good numbers for such a company. So this would take the stock to a stock price of $67, and if bought at today's price, it would be an annualized return of 11.5%. Now let's combine these two cases to get an average. This would take the stock price to around $48 with an annualized return of 4.35% if bought at today's price, and these assumptions come true. So these are my current estimates for Chipotle, a bit on the lower side, but currently the company is selling for a PE of over 30 is of course way too expensive for me. Maybe I'm missing something. You can definitely let me know down in the comments, but I won't be touching this stock in a long while. But that's just what I'm thinking, and I'm glad if you can tell me more about this company if I'm missing something or not. So I'm gonna see you in the next video, and thanks for watching. Bye.